Morning, students. Welcome to the second session of budget and budgetary control. So, hope you got the concepts which we shared yesterday, and we'll take it forward now. So, yesterday we discussed all types of what is budget, what was budgeting, what was budgetary control, what was budget manual, and then what are the different types of budget depending upon capacity, depending upon functions, or on the basis of term, long term or medium term or short term, or what is the master budget. Today we'll take it forward. So we did a couple of questions yesterday. This is the sales budget. So we already discussed yesterday. Sales budget could be made product wise or group wise or area wise or region wise. So this is just a template of the format how we can make the sales budget. Then production budget. So the starting point, as I told you yesterday, was first it's always better that we fix up the sales budget so that we should know how much sales we are going to do in the next year or in the budget period, whatever we have taken. And then we make the production budget. So when we know that this much units we are going to sell, so then it's very clear that how many units we need to produce. So that will give us through production budget. And then production budget, this is the format. You should take a note of this because we'll be doing questions. Budgeted sales. So the first step, as I told you, budgeted sales, then desired closing stock, total quantity required less opening stock, and units to be produced. So this is basically budgeted, how much we are going to sell in the next year or the budgeted period. So this much is the requirement, plus what all closing stock we have planned to keep at the end of the budgeted period. So together we have the requirement. So sales plus closing stock, that is the total requirement we have, less opening stock that we already have with us. So rest of the units has to be produced. So that is the units which the production budget is going to give us. Production budget can be made in units also and then in value also. All right. Then moving forward, we have planned utilization budget, as I explained yesterday. So it's all about how much capacity we need for the budget period, maybe, in hours or maybe in units or maybe in any type of weights which is applicable to the organization. After production budget and plant utilization budget, we make the direct material usage budget. How much direct material usage means consumption. How much direct material we need to consume. So it will depend only when the production budget is made. So let us say 10,000 units are to be manufactured. Now how much raw material is going to be consumed to produce this 10,000 units? So that is going to tell us the direct material usage budget. And then once we know that how much we have to consume, this is the brief format of the direct material usage budget. So if we have the product A and product B, these many units, 4,000 and 9,000 units must have come from the production budget. So then we identify how many raw material we require. So once we know how much raw material we require, that much raw material, then direct material purchase budget is going to tell us how to purchase and when to purchase. All right. So then purchase budget, raw material purchase budget, how to purchase, how much to purchase, and when to purchase. So how much to purchase, economic order quantity is going to tell us, and reorder point is going to tell us at what point of time we need to make a fresh purchase. All right, so purchase budget for you. And this is the brief format of the purchase budget, the desired closing stock, units of required for the production. So whatever is the material consumption, plus whatever material we wish to keep it in closing stock. So total will be our requirement for the whole budget period, less whatever stock we already have. So rest we have to purchase. All right, we'll be doing the questions. We'll understand it better. This, I think, numerical we did yesterday. So it was at different capacity. So when we make the budget at different level of activities, like we did in this question, 55%, 65%, 75%, then we made for 85%. This is a part of flexible budget, right? So flexible budget, when we make the budget at different level of activities. Fixed budget is when we make the budget for only one level of activity, irrespective of any level of activity we are estimating for the future. So fixed budget stands fixed, and it is generally applicable and suitable for organizations where is no much of technology change or product change, or customer base is stable. In this scenario, fixed budget is suitable, but otherwise flexible budget is very popular, and it is applicable in most of the organizations. And then we did this solution. Now the personal or labor cost budget. Although we did many types of budget, I explained you master budget also. Master budget is the entire income statement, you can say, or the cost sheet, income statement in costing terms. So the cost sheet, I'm sure you must be knowing by now. So the format of the cost sheet, the entire cost sheet, plus, we add the financial expenses and the tax also, if we include, it's the entire income statement. That is the master budget. So master budget is the income statement also and the balance sheet also, all right, that we estimate for the budget period. So personal or labor cost budget is another type of budget. So once, see the sequence. First, sales will be fixed, then units of production, and then raw material consumption, then raw material purchase, then labor. So we are actually going in sequence. All right. And then will be coming overheads. So everything is in sequence, and every budget, every department is interrelated. All right. That I explained you yesterday also. So once sales budget and production budget are compiled and plant utilization budget is decided, then we have the various machine operations involved and the services required. So this will facilitate preparation of an estimate or different grades of labor required, whether we require semi-skilled labor or skilled labor or unskilled labor. So only then, when everything is being charted out, then only we are able to decide what type of labor and how much labor hours are required for the particular job, whether it's a labor intensive or a machine intensive. So everything is judged only after the previous budgets have been charted out. So this is just pro forma of the labor cost budget. So units to be produced, of course, we have to have the production budget ready before we make the material and the labor budget. So units to be produced, 4,000 and 5,000. This units must have come from the production budget. Then labor per hour per unit, total hours, and then total budgeted cost at ₹2 per hour. So this is how the pro forma of the labor cost budget. Generally, what we do and how we actually calculate the labor cost, we need the hours, per unit of output, and then we have the rate per hour. So this way, the whole budget is made, labor cost budget. Moving forward to production or factory overhead budget, similar pro forma has to be there for administration and selling and overheads, selling and distribution budget. All right. So this is all you can see, just a pro forma. Anticipated activity, 1,18,000 direct labor hours, and this all the components of factory overhead. All the components, direct and all the components, variable and fixed. So all these components together make total fixed overheads and then total factory overheads. So variable overheads and fixed overheads together make factory overheads. I believe you must remember when we add factory overheads to the prime cost, we get the works cost, right? So this is nothing but the basically or all proportion of the works cost, which is actually just the factory overheads. So factory overhead recovery rate, we calculate total factory overheads divided by total labor hours. So it could be labor hours also. It can be absorbed on the basis of machine hours also. You must have done in overheads, right? So how we absorb the overheads? On the basis of labor hours or the machine hours, or a combination of any other basis, prime cost or the works cost. So in here we have absorbed on the basis of labor hours. So total factory overheads divided by total labor hours will get the factory overhead absorption rate. All right. So similarly, we can make for selling and distribution and office and administration also. All right. I believe there should not be any queries so far. Good morning, all of you. Good morning. All right. Let's move on. Okay, so we have this illustration for you. Just kindly note the illustration, all of you. So a production plan for its two products, Minimax and Heavy High. So there are two products for the year 2021 to 22. The company's policy is to hold closing stock of finished goods at 25% of the anticipated value of the sales of the succeeding month. All right. See, you have to understand the question every time, in every session, wherever I come, I always say you have to understand the question and you have to understand how to approach the question. So half of the, work is done if you actually understand what is supposed to be done. All right. So we have to hold the closing stock of finished goods at 25% of the anticipated volume of sales of succeeding month. All right. So the sales of May, 25% of the sales of May will be the closing stock for the sales of for the April month, because it's all the figures are anticipated, right? So we have what all we have, the following are the estimate data. So two products are there. We have the budgeted production units with us. We have the direct material cost per unit. As I told you, variable cost should be denoted in per unit. Manufacturing overhead are in not per unit, so manufacturing overhead must be absorbed, right? Direct cost is always allocated and indirect overheads or indirect costs are always absorbed, right? So the estimated units to be sold. So these are the units to be sold for the first 4 months of the year, and you have to make the production budget. You have to make production budget for the first quarter. All right. First quarter means April, May, and June. You have to take just 3 months, April, May, and June. And this July is actually given because you have to take the sales of the succeeding month, 25% sales of the succeeding month as closing stock of the current month. That's why July is given. Otherwise, you have to make a production budget for April, May, and June. All right. For the first quarter. So we have the units to be sold, 8,000, 10,000, and 12,000 and 6,000. All right. So we have to make the production budget. For production budget, we need the sales. All right. And we have the sales with us. So two products, you can also take the note of the question. So Minimax and Heavy High. All right. So let me just take the Minimax as of now. So it's April, May, and June. All right. We also make according to April, May, and June, the sales. First of all, you can write the sales over here, 8,000, 10,000. I'm just doing and explaining you for the Minimax. All right, it's 12,000. It's not coming. Screen is less. Okay. All right. Now, let us first find out the closing stock. How to find out the closing stock? Add closing stock. Okay. Let me do it here for you. So April, May, and June. Okay. And then for Minimax. I'm doing for Minimax, and then the same thing will be repeated for the second product. All right. 8,000, 10,000, and 12,000. 8,000, 10,000, and 12,000. So these are the sales. We have got the sales first, because to make the production budget, we should have the sales first, right? Sales, then we add the closing stock. Sales to sales, we add the closing stock. We need to find out how many units to be produced. So this is basically a production budget. And I hope how we make a production budget. If I tell you here, how we make a production budget, sales, add closing stock, less opening stock. All right. So we will get the units to be produced. Okay. So we should have the budgeted sales ready with us. So this much is required. Add the closing stock, which we require to, or which we wish to, we have estimated to keep at the end of the budgeted period, less the opening stock, which we already have. So rest of the units, we need the fresh production. All right. So that is how we are going to do here. Sales, we have the sales with us in the question, the budgeted sales. Add closing stock. Now what they're saying, giving us the information about the closing stock, they are saying Closing stock, how we hold the closing stock? 25% of the anticipated volume of sales of the succeeding month. All right. So succeeding month for April, I'm just focusing on Minimax as of now. 10,000 is the sales of Minimax for May. So 25% of the sales of May will be the closing stock for April. All right. Succeeding month means the next month, the following month, right? So 25% of sales of May will be the closing stock for April. So 25% of 10,000 works out to 2,500. So 2,500 will be the closing stock for April, and 25% for June month will be the closing stock for May. All right. So it will be 3,000. 3,000 for May will be the closing stock. And see, that's why July is given, because succeeding month sales, 25% of the succeeding month sales is your closing stock of the current month. All right. So closing stock of June is 25% of sales of July. I'm repeating. 25% of the sales of May will be the closing stock for April. Closing stock for May will be 25% of the sales of June. Closing stock of June will be 25% of the sales of July. All right. So it will be 4,000 for June. So the closing stock are 2,500, 3,000 and 4,000 respectively. 2,500, 3,000 and 4,000 respectively. That is the closing stock we have calculated as per the information given in the question. Any doubts so far? Yes, 2,500 closing of April and also opening of May. All right. So now we have to see the opening stock. Less opening stock. How you will find the opening stock? Closing stock of April will be the opening stock of May, right? So 2,500 will be the opening stock, and opening stock are the deduction. Closing stock of May will be the opening stock for June. So 3,000. Can anybody tell me the opening stock of April? How should we calculate the opening stock of April? This is how we have calculated production budget. Sales was given to us. Closing stock we have calculated. Closing stock was 25% sales of the next month, right? Opening stock, the closing stock of current month will be the opening stock of the next month. So closing stock of April will be the opening stock of May. Closing stock of May will be the opening stock of June. How much will be the opening stock of April? Can anybody find out the opening stock of April? Can anybody has this answer? Opening stock of April. Let me see if anybody can answer this. Opening stock of April. Just try the opening stock of April. 25% of March sales. March sales. 25% of March sales. March is not there. We don't have the March sales. How we will calculate the opening stock of April? On the same fundamental. Now, the opening stock of April. So the closing stock of March. All right. Closing stock of March will be the opening stock of April. I'm repeating. Closing stock of March should be the opening stock of April. How to calculate closing stock of March? Closing stock of March will be 25% of the sales of April. The way we have calculated the closing stock for other months, the same way, first calculate the closing stock for March. That will automatically become the opening stock of April. So 8,000 is the sales of April. 25% will be the closing stock for March. So 2,000 will be the closing stock for March, and closing stock of March will become the opening stock of April. All right. This way you have to do, because we are taking the closing stock as a percentage of the succeeding month. All right. Students, hope you have understood this. So this way we can calculate the production. Now production units. Production units. This is going to give us the value in units. How much units to be produced for the first quarter, April, May and June. Can I have the answers for production units for April, May and June, all the 3 months? Yes, very good. Many students are able to calculate now. Opening stock of April will be 2000, which is nothing but closing stock of March. All right. So can anybody tell me the production units for April, May, and June? Okay, Ganesh, understand here. Those students who have not understood, what we are doing is closing stock of a month is the opening is 25% of the sales of the next month. That means sales of May is 10,000. So 25% of sales of May will be the closing stock of April. 25% of the sales of June, that is 3,000. 25% of 12,000 is 3,000 is the closing stock of May. Similarly, closing stock of March will be the 25% of the sales of April. I'm repeating. Closing stock of March also will be 25% of the sales of April. The same way which we have, how we have done for April, May, and June, the same way do it for March also. So closing stock of March is 25% of the sales of April. Sales of April is 8,000. So closing stock of March must be 2,000. And closing stock of March becomes opening stock of April. So you have to calculate 1 month earlier, and then automatically the closing stock of that previous month will become the opening stock of the next month. I hope now students have understood. All right. Tell me the production units. Okay. 8,500 for April. 10,500 for May. And 13,000 for June. So these are the units, and then of course make the total also. Total units also, do the total production units. Total production units, April, May, and June. So 8,500, yes, okay, good that you have understood. So this is the total. Now repeat the similar exercise for heavy high, the second product also. Repeat the similar exercise, all of you. I'll just explain it over here and then you do it. All right. So for the second product, heavy high, closing stock of April will be the 25% of the sales of May. So sales of May is 8,000. So closing stock 8,000, 25%. All right. So 2,000 will be the closing stock of April. Then for the May 25% of the closing stock of the 25% of the sales of June will be the closing stock for the month of May. All right. So 9,000, 25%, 2,250 is the closing stock of May. That is 25% of the sales of June, and 25% of the sales of July will be the closing stock for June. So 25% of the next month's sales is the closing stock for the current month. All right. So just calculate 3,500. So we have got the closing stock here also. Closing stock, we have got it here. 2,000, 2,250, 3,500 for the next product. Closing stock for all the 3 months. I hope you got it. Now, can you calculate opening stock for all the 3 months now? So closing stock of April will become the opening stock of May. Closing stock of May will become the opening stock for June. What about April? Closing stock of March will become the opening stock of April. Closing stock of March will become the opening stock of April. And how we calculate the closing stock of March? 25% of the sales of April has to be the closing stock of March. So 6,000, 25%, 1,500 closing stock of March. So it will become the opening stock of May. So I'm just writing it over here for you. Opening stock. So 6,000, 25% will be the closing stock of March. That will become the opening stock for May. So 1,500 opening stock. Closing stock of April will become the opening stock of May. Closing stock of May will become the opening stock of June. So this is how we have done for the second product also. Sales, add closing stock, less opening stock, you will get the production units. Can I have the production units for the second product? Can I have the production units for the second product, please? The total production units and the total also. I need the total also. So total of mini-max and heavy high, how much is the total production units? Anybody has done the total production units? Let me also calculate. Total production units. 32,000 is the total. So total production units for mini-max is 32,000. Calculate the similar total production for heavy high also. Okay, so I've got the answer. Just cross check if the answer are correct. 6,500, 8,250 and 10,250. Great. So I really appreciate students are solving simultaneously. It will clear your concept, students. So just tell me the total production units for heavy high. 6,500 plus 8,250 plus 10,250. So it comes out to 25,000 for this and 32,000 for this. So these are the total production units for both the products, mini-max and heavy high. So production budget in units is ready. 32,000 of mini-max has to be produced and 25,000 of heavy high has to be produced. All right. Let me scroll down. So this is how we have done here. All right. So this is the final production units total. So both the products, mini-max and heavy high, the sales. So to the sales, we add the closing stock, we deduct the opening stock. All right. And this is how we have calculated the opening stock. So we got the production units. So we have the total production units with you, 32,000 and 25,000. Students, any doubts so far? All right. So we have the production units. Now we have made the production budget in units. See, we have made the production budget in units. Now we have to make the production budget in value. All right, in rupees. So 32,000 and 25,000, 32,000 and 25,000 are the units. Let me write it somewhere here. 25,000. So these are the production units for both the products. Now how to make the value? See, we have the units with us. We have the cost with us. Direct material cost per unit, direct labor cost per unit, 220 and 130. Again, I'm doing it for mini-max. Now, how many units? 32,000. 32,000 into 220 will give the material cost. 32,000 into 130 will give you the direct labor cost. Similarly, we can do it for, just erase it off now. Okay, 25,000. Now make the statement production budget in value. So production budget right at the top, production units for mini-max and then heavy high, 32,000 and 25,000. And then we'll start with the cost, production cost. What is the production cost? Material cost, labor cost, and overheads. Material cost, labor cost, and overheads. Together, the total will be the production cost, the production budget in cost, in value, right? So material cost, then the labor cost. So respective cost will come. So 32,000 for mini-max and 25,000 for heavy high. Manufacturing overhead. How we will absorb the manufacturing overhead? It's given in total. We want the manufacturing overhead absorbed for each of the two products. How we are going to do it? How we are going to do it? Prachi, no, I hope the concepts are clear to you. Any doubt you can ask still. All right. Yes. How should I get the manufacturing overhead? The direct material cost is given per unit. Direct labor cost is given per unit. Manufacturing overheads are given in total. How to absorb the manufacturing overheads to both the products, mini-max and heavy high? Any answers? 5 lakh and 32,000. What is 5 lakh? How to absorb it? How to absorb the manufacturing overheads to both the products? Any answers? Material and labor we have calculated. How to absorb the manufacturing overhead? Yes. we have to calculate the absorption rate. See, the manufacturing overheads are 4 lakh for the whole department, and budgeted production units are 1,80,000. So you have to calculate the absorption rate. 4 lakh divided by 1,80,000. It's 4 lakh divided by 1,80,000. You will get the production rate. So absorption rate you can calculate, or you can do it total wise also. So just calculate the absorption rate, all of you, and then we will add the manufacturing overheads to it. Just do it. Yes, very good. Most of you have calculated the absorption rate. So now this is how we do it. So absorption rate, 4 lakh divided by 1,80,000 into 32,000. 5 lakh divided by 1,20,000 into 25,000. So absorption rate, we have got the absorption, the overheads for the entire department. This clear? So for the Minimax, we have to calculate the absorption rate. 4 lakh divided by 1,80,000 rate, and 5 lakh divided by 1,20,000. So these are the rate, then multiply with the number of units, you will get the manufacturing overheads. So take the note of the production cost budget. This is the material cost and the labor cost we have calculated. We have just multiplied by the units. And then manufacturing overhead absorption rate we have calculated. How we calculate? Manufacturing overheads divided by total hours. If they have given in hours. Okay, they have given in units. So absorption rate per unit is given, and that way you can calculate. So absorption rate multiplied by the number of units. For both the products, you will get the manufacturing overheads. So the total production cost for Minimax is this, and the production cost for Heavy High is this. I hope there should not be any problem so far in this question. Any issues? Any problem, any concept which is not clear, please ask. Take a note of the solution, please, so that we move forward to the next one. So we have made the production budget in units and then in value. So how we calculate the production budget in units? Quickly, we should know the sales. We add the closing stock to the sales. We deduct the opening stock, and we get the current production to be required. All right. And then, of course, the production cost, material, labor, and overheads, and what all costs are given in the question, you can calculate. All right. Yes. So we have calculated the production cost. So I think, okay. Let us move forward now to the next one. I hope you have got the note of the question and the solution as well, and you have understood also how we have approached this question. Moving to the next one. All right. You have to prepare the master budget here. So the next question is the master budget for the next year. You should know. See, you have to make the master budget first thing, and second, you should know what is the budget period. So here the budget period is a year, the full year for the next year. It could be for 6 months, it could be for next week, it could be for a quarter. So you should be very clear. Make note in the question, what is the budget period given in the question. Accordingly, you have to do the solution. All right. If the budget period of the quarter and you multiply the cost with number of months, let us say for the whole year, you multiply the cost into 12. But otherwise, the question is asking you to calculate for the quarter. So be very, very careful. Students, these are the mistakes which students do in the exam, even if they know the solution, even if they know how to do it. But these things actually, make the solution wrong. And, then we feel actually we have done the everything correct, and why we haven't got marks. So these are the mistakes which students do. They don't read the question properly. All right. So it is for the next year. So what all we have been given in the question, just try to understand the question. We have been given the sales. So sales for 2 products we have been given. And then the direct material cost is a percentage of sales. That means it has to be variable. Direct wages also, it's given. Factory overheads are given. All right. Some per month are given, and some as a percentage of sales are given. So whatever per month is given, we will consider it to be sort of some variance of fixed has to be there. Stores and spares, percentage on sales. So any percentage on sales is given, we have to take it as variable. And where per month charges are given, we can consider them as fixed charges. All right. Depreciation, light and power, repairs and maintenance, other sundries, administration, selling and distribution. See, master budget is a complete cost sheet budget. All right. And we, over and above the cost sheet, we include financial expenses and taxes also, if it is given in the question. So master budget is a complete income statement. All right. I hope you know what is income statement. Okay. Then we should assume, all right, if the budget period is not given, yes, you can assume it for the year, but normally it is generally given in the budget questions, because we have to make a budget period is as important as any other information in the question of budget. All right. Like in the last question, see what mistakes you can make in the last question. And many students make this mistake. What they do, the information, I'm just telling you what is the scope of mistakes in the questions. 4 months are given in this question. The students make statement for 4 months. July also. They don't read that you have to make the production budget for the first quarter only. They just start the question, just reading the question at a glance, and they start the question, and they calculate the closing stock for July also. So because they don't have the information, sometimes they assume. So they actually take into consideration July also, and then they calculate some wrong figures because August information is not given. All right. So that is why you should know budget period. You should note the budget period in the question, and generally it is given for the budget question. But yes, if nothing is given, you can assume, and you always must make assumptions. You always must write the assumptions in the question. All right. So moving forward to this question. So let's make a master budget. The format we'll be taking as the cost sheet only here, because no other financial expense is given in this question. Start with sales. So sales is already given, 6 lakh and 2 lakh. So together sales is 8 lakhs. So we have the sales. Do it along with me, please. Okay. Manufacturing overheads, please explain. Manufacturing overhead, Prachi, you have no idea of manufacturing overhead? You must have done the cost sheet. You must have done overheads absorption. Manufacturing overheads are actually indirect factory overheads. Indirect factory overheads. All right. So we have 3 overheads: manufacturing, office and administration, and selling and distribution. So manufacturing overhead or factory overheads or works overheads, all 3 are similar. Clear? Manufacturing or factory or works. Works overhead also, in some of the questions you can get this terminology. So all means the same. All right. So basically they means indirect cost, which are absorbed. Indirect cost is always absorbed. It's direct cost is always allocated. All right. So here we have the direct cost and the indirect cost. So Prachi, we have the manufacturing overheads in this question. If you can just see the question. So this question is all about manufacturing overheads. These are all manufacturing overheads. And then administration, selling and distribution. So this part is we can take as manufacturing or factory or works overhead, right? So with the sales, you just deduct now the direct material cost. So starting with sales, less material cost. So 8 lakh are the sales. 60% of sales is the material cost, direct material cost. So we'll be deducting from the sales the material cost. Can you get the material cost, all of you? I hope you have started the question. So material cost, calculate the material cost, please. 4,80,000 is the material cost. Then the labor cost, direct wages. Then the direct wages. So direct material, direct wages. What does it make? What is the first landmark of the cost sheet? Direct material plus direct wages. What we get? Okay, I'm glad, Prachi, you've understood. Direct material, direct wages. What we get after we add direct material and direct wages? What we get? Prime cost. Yes. So prime cost. So first calculate the direct wages. 20 workers into 150 per month into 12, because the budget period is 1 year. So here you can do into 12, and that is going to come out to 36,000. So together they make the prime cost. All right. So prime cost is 5,16,000. To the sales, you deduct the prime cost. All right. The sales, we deduct the prime cost. Then we start with the factory overheads. It's better if you split the variable and the fixed to as much extent as possible. All right. And if you're not clear to something, just make an assumption. So indirect labor, factory overheads, indirect labor and works manager, 500 per month into 12, 400 per month into 12. Consider them as fixed. All right. 2.5% on sales, consider it variable. So first you can deduct the variable factory overheads first, or you can just split the fixed and the variable. So variable, it's stores and spares are variable. Depreciation, let's consider as fixed. Light and power, consider as fixed. Repairs and maintenance, you can consider variable or fixed, which way you like. Other sundries, of course, they are variable, right? So just deduct factory overheads first. Factory overheads, and whatever comes, then you deduct the administration, selling and distribution. So prime cost plus factory overheads. So from the sales, first you deduct the prime cost, then you deduct the factory overheads. All right. What you get, the prime cost plus factory overheads are the works cost. So from sales, you deduct the works cost, and then you will deduct the administration, selling and distribution. You will get the profit. All right. So I'm just explaining you sales. First, you take the prime cost, then you have the factory overheads. To the prime cost, you can add the factory overheads. So you will get the works cost. You deduct works cost from the sales, and then you deduct administration, selling and distribution expenses. You will get the profits. Selling administration expenses, 36,000 per year. Consider them as fixed. All right, good. Yes, prime cost is 5,16,000. So I hope you have understood how we do it. Tell me the profit, please, those who have calculated. From sales, deduct the prime cost, deduct the factory overheads, and then deduct administration, selling and distribution expenses. Can you tell me how much is the works cost? How much is the works cost? Factory overheads, 38,000. All right. Factory overheads, 38,000. Just cross-check the figures, calculate your own answers, and tell me the profit. So from sales, you have to deduct the material cost and the labor cost, that is the prime cost. Then you deduct the factory overheads, variable and fixed. And then you deduct administration, selling and distribution, all three. Don't merge all the costs. You should highlight prime cost separately. You should highlight factory overhead separately. And again, factory overheads also variable and fixed. And then administration and selling, you have to subtract it later. Don't merge all the costs, because once it's direct cost, another is indirect cost. Indirect costs also, we have factory or manufacturing overheads and admin, selling, distribution overheads. 5,26,800. It is just cost sheet. That exactly I was telling. Master budget is actually the entire cost sheet. See, I am just what exactly master budget we mean. I'm just explain it over here. See, what is master budget? Actually, master budget is the complete cost sheet I told you yesterday also. Clear? So we make the whole, the sales, we can start with the sales, then less, okay, the prime cost. First, we make the prime cost, then the factory overheads. All right. Then you can have the office and admin overheads. Then you can have the selling and distribution overheads. Yeah. So these are the overhead. Then you will get the profit before tax. What you get. Then you less tax. All right. Here you can even have profit before interest and tax also. Interest and tax, then less interest, profit before tax, then less tax. All right. So this is PAT. So basically the master budget is nothing but an income statement, but in a costing format. All right. So you can have this, the information in the beginning as the cost sheet, and then take it to the we have to consider the interest and the tax also, because you're making a master budget. So you have to include the entire format of an income statement. So tax and interest can also be a part of the master budget. So we say the master income statement here. But if we talk about costing, it's nothing but the cost sheet only. All right. And similarly, we make the master balance sheet also, master budget for the balance sheet. So we make the format for the balance sheet, for that, the vertical format. All right. So this is nothing but, all right. Cost sheet instead is reverse cost sheet. No, for the master budget, we can make the cost sheet also, but it's always better, since we are making the master budget. We are not making the cost sheet. We are making the master budget. It's better if you start with sales. All right. So otherwise in the cost sheet, we start with direct material. But since it's a master budget and we have to reflect the profit, so it's better if we start with the sales. All right. So I hope light and power. Light and power, you can take it as fixed, you can take it as variable also, because here you have, because there is no any other information. Light and power generally we take as variable. All right. But here you can take it as fixed. That's okay. You can write an assumption also. The idea is that the student should be aware of the concept. Let us see. Okay, we have the solution also here. So master budget for the year ending, the way we make the income statement for the year ending. Similarly, we are making the master budget. So we have started with the sales, right? And then the cost of production, we deduct the cost of production, direct material, direct labor. We get the prime cost here. And then the fixed factory overheads, assumed fixed. See, it's also written assumed fixed. You can assume it as variable also. Assumption you can make on your, but you have to make an assumption. You have to write an assumption. And then the stores and repairs and maintenance, sundry expenses. So we get the works cost, like I was explaining you. So this is the works cost. So prime cost, then the variable, and then this, then you have the works cost, and then you add the selling and distribution to the works cost, you will get the net profit. You can write gross profit as well, that's okay. So the final thing is the net profit. That means master budget is an income statement in a costing format, you can say. So we have to take in this question, we don't have interest or taxes, but we do take interest and taxes also in the master budget. So if let us say tax, we are paying 30% on the profit. So we have to make an extension to this master budget, and we have to less tax also, and then the surplus left. All right. So this is how we make the master budget. It's nothing but the entire cost sheet, but it's better if you start with sales. All right. Yes, you can do it. If interest and tax are given, you can do it EBITDA also, and you just compute all the factors like we make an income statement. You can do that. EBITDA, then EBIT, then EBT, then tax, and then PBT. All right. So you can do it that ways also, because master budget generally you will get the interest and tax factors also here. In this question, it's not there, but be prepared if the master budget question has all sorts of interest and tax information. Also, you have to go further with the net profit now. All right, the way we do here only. Here, students, so I hope this solution is clear, and this question, have a look at the final look at the question. So this was the question, and this is the master budget we made. I hope there are no queries so far. I hope that's clear. Okay, let's move forward. We have another illustration. Just take a note of this illustration. A single product company estimated its quarter-wise sales. So we have been given the quarter-wise sales for the next year, the whole year. The budget period must be the whole year. So quarter sales units. Sales are given in units. Quarter 1, quarter 2, quarter 3, and quarter 4. The opening stock of finished goods is 6,000 units, and the company expects to maintain the closing stock of finished goods at this units. Okay, so 6,000 opening stock of finished goods, and closing stock is also given here. The production pattern in each quarter is based. Now, the direct production pattern is given to us directly. All right. So we don't have to actually quarter-wise information is not given for the stocks. So the production pattern is given. There's a difference between both the questions which we did earlier and this now. In the earlier questions, the pattern of closing stock was given. So there it was expected that we should calculate the sales was given. We should calculate the closing and the opening, and then we find out the production. All right, pay attention what I'm saying. In the earlier question, the pattern of closing stock was given. So they were expecting us to calculate the closing stock, then the opening stock. Sales was already given. So we calculated the production units. In this question, they are giving us the production pattern. They are giving directly the production, how much production we have to make. They are not giving us the pattern of the closing stock or the opening stock, right? So the production pattern in each quarter is based on 80% of the sales of the current quarter and 20% of the sales of the next quarter. All right. So this is how they are asking us to do. So if I just write the over here only, I can write 30,000, 37,500, 41,250. And 45,000. Yeah. So we have all the four. I hope it's visible to you on the screen. So we have the sales, and that too in units. We have the sales in units. The opening stock of finished goods is 6,000 and the closing at 12,250. Production pattern. Now, how much is the production? They are directly giving us the production pattern. Is based on 80% of the sales of the current quarter. So current quarter sales 80% and next quarter 20%. So 20% of the next quarter and 80% of the current quarter. Clear? So just calculate the production for all the 4 quarters, quarter 1, 2, 3, and 4. So these are the quarters given. Okay. So production, now what exactly we are supposed to? Opening stock of raw material also is given. Closing stock of raw material is given. And each unit of, okay, the company proposes to purchase the entire requirement of the, okay, the question follows. Quarter-wise purchase of material information is given. You have to make 3 budgets. Production budget, raw material consumption budget in quantity, purchase budget in quantity and value, production budget in units. You should just note down these things, that what exactly is required out of you. We have to make the production budget in units, raw material consumption budget in quantity, and raw material purchase budget in quantity and value. All right. So production budget in units, we were doing the production budget here. Calculate the production, please. How to calculate for the 4th quarter? Okay, let us see. First, let us do it for the 1st quarter. Production for the 1st quarter, 80% of the current quarter. 30,000 into 80%. So 0.8 into 30,000, 24,000, 37,500. This is 30,000, 41,250, 33,000. I'm calculating for the current quarter only. 45,000, 36,000. So 80% of the current quarter will be the production and 20% of the following quarter. All right. So 0.2, 20% of 37,500, 7,500. All right. So 20% of the next quarter sales will be the sales for the current quarter also. 41,250, 8,250. Just cross check the answers, please. 45,000, 9,000. Now, how to do it for the last quarter? Let us find out. I hope the figures so far are correct. 24,000, 30,000, 33,000, 36,000. The production pattern they have given directly to us. 80% of the current quarter sales and 20% of the next quarter sales. So 80% of the current quarter sales we have. So we have done 20% of the next quarter sales Now, what is the last quarter? We don't have the, the first quarter of the next year. We don't have. So how to calculate the closing, the 20% of the next quarter for the fourth quarter? There must be some information in the question. The opening stock of finished goods is this. Maintain the closing stock of finished goods at the end of the year. Okay, this is the closing stock they have given. The company maintains this 20% of sales of next quarter as closing stock of the current quarter. Now, this is the line which is giving you hint. This is the line which is giving you hint. The company maintains this 20% of sales of the next quarter as closing stock of the current quarter. That means this 12,250 units, the closing stock of finished goods at the end of the year. We maintain the closing stock of finished goods at the end of the year. End of the year means the fourth quarter. The fourth quarter closing stock 12,250. So they are saying, if you can read the last line, this 20% is basically the closing stock of the next quarter. The company maintains 20% of the sales of next quarter as closing stock of the current quarter. So 7,500, the 20% sales of the next quarter will be the closing stock for first quarter. 8,250 is also the closing stock for second quarter. 9,000 is also the closing stock for third quarter. And 12,250, they have given us the closing stock. So that must be the 20% of the sales of the next quarter. All right. So some information has to be hidden in the question. You have to give the right interpretation to what information is given in the question. All right. So this line actually explains that the 20% sales of the next quarter we have taken as the sales of the current quarter, and this 20% is actually the closing stock also for the current quarter. So for the last quarter we have been given the closing stock that directly makes it 20% sales of the next quarter only. All right. So I hope you have understood this. Clear? So yes, we have now. Can we have the production? 34,500, the production for first quarter. How much is the production for the second quarter? 38,250. How much is the production for the third quarter? 42,000. Can I have the production for the fourth quarter? 36,000 plus 12,250. 48,250. So the production of the fourth quarter has to be 48,250. Can I have the total production, please? Total production for the next year, production unit, production budget in units. Can I have the total production for the next year as the production budget we have calculated? 34,500 plus 38,250. Plus 42,000 plus 48,250. Students, I want you to give the answers. So then that way you will be calculating along with me. Can I have the total production for the next year? All quarters to be added. I hope there should be no doubt in the highlight of this question is 12,250. So far, the highlight of the production budget. So only see in the previous question, the highlight was the opening stock. All right. The closing stock of March has to be the opening stock of April. In this question, the closing stock of fourth quarter was actually the closing 20% of the production is also the closing stock of that particular quarter also. So 20% we are taking it. Okay. 1,60,000 or 1,63,000. Some questions. Some students are 24. Somebody has given me this answer. It's 31. Yes. Please don't give the wrong answers. 31,500. 31,500. 34,500 is wrong, Jyoti. 31,500. Now can I have the correct? Let me calculate also. You should be very, very accurate with the figures. Otherwise, the whole calculation will be wrong. Okay, it's 1,60,000. It's 1,60,000. The total production units is 1,60,000. We have the quarter wise production also, and we have the total production also. All right. Here we can have the total production as a total also. Total of the sales. So we can have the total of the sales 30,000 plus 37,500 plus 41,250 plus 45,000, 153. So sales, what is the format of the total company wise also we can calculate. 153,750 is my sales. All right. Then we have add the closing stock 12250, deduct the opening stock. It's 6,000. Just calculate how much we get. We are getting 1,60,000 as the production as a whole. So whole production as a total also you can calculate, and then quarter wise also you can calculate, right? So take a note of this. We have calculated the production required as a total format also, sales plus closing stock minus opening stock. Sales, total sales we have, opening stock we already have, closing stock is also already there. So we can calculate the total production, and here we have calculated quarter wise also. So 1,60,000, the production budget we have made in units. All right. No, it's wrong. Uday, the answer is wrong. It's 1,60,000. It's 1,60,000. Uday, your answers are wrong. All right. Just correct the figures. Okay. So this is the, right. See, here also they have calculated the total annual production as well. So sales in 4 quarters, add closing balance, less opening balance, opening stock basically, and closing stock, total number of units to be produced in the next year. And this is the way we did it. Just take a note of the production budget in units. Although this also is going to do, I just cross-checked and to calculate the total also, but production budget in units, if we have calculated, that's sufficient. Any doubts so far? This was the highlight, because they are saying 20% of the sales of every quarter is also the closing stock of every quarter. And the closing stock of last quarter will be taken as the closing stock for the year. All right. For the last quarter. So this is the total production. All right. Now let us move to the next budget, raw material consumption budget. Raw material consumption budget we have to make. Since now we know how much we have to produce. How much is the production in units? 1,60,000 is the production in units. So how much is the raw material consumption budget? Let us see if any information is given. Okay. So this was the production part, right? Now the next part of the question is for the raw material. So the first paragraph was to calculate the production budget, and the last paragraph is to calculate the raw material information. And then this paragraph is to calculate raw material purchase budget. See, all the information is categorized in the question. The last information is for raw material purchase budget. So we will ignore it for the time being. We have to take this information. Opening stock of raw material in the beginning is 10,000. Closing stock at the end of the year is 5,000. Each unit of finished output. Now, this is important for consumption. Each unit of finished output. How much is the finished output? The production. 1,60,000 we need to produce. To produce 1,60,000, how much raw material we require? That is raw material consumption budget. I'm repeating. We have calculated the current production we have to make. Current production is 1,60,000 we need to produce. 1,60,000 units we need to produce. To produce these 1,60,000 units, how much raw material we require? How much raw material we require? That is the consumption budget. All right. So that is the consumption. Now, information is consumption means each unit of finished output. This is the finished output, the production which we have done. Requires 2 kgs of raw material. So 1,60,000 is the total basically. So you can do quarter wise also. So for the first quarter, 31,500 units we are produced into 2. So how much raw material we will require? Just calculate raw material consumption. We can calculate from here only. Units, right? So into 2. So this is raw material consumption. How much raw material will be required? So for every unit of finished product, 2 kgs of raw material is required. So 31,500 into 2. Please give me the correct figures. 63,000 kgs of raw material is required for the first quarter. 2 into 38,250. 76,500 kgs of raw material is required for the second quarter. Do this exercise for all the 4 quarters. For the first quarter, I've given you how to calculate. We have in the question raw material consumption. Calculate the raw material requirement for the first quarter. Calculate the raw material requirement for the second quarter, which I have also calculated. Just cross-check the figures. Give me the figure for third and fourth quarter. If 1 unit of finished product requires 2 kgs of raw material, how much raw material consumption we need to have for all the 4 quarters? All right, for a total of 1,60,000 units of production. Okay, I'm getting the answers here. 63,070, 38,250. So 38,250 into 2. It's 76,500. Please give me the correct answers. Otherwise, the whole solution will be wrong. Sunil, it's 76,500, I believe. For the third, any answers coming or should I calculate? 42,000 into 2, 84,000. And for the last quarter, 48,250 into 2, 96,500 kgs. So this is the total consumption of the raw material quarter-wise. Can I have the total consumption for the year? Can I have the total consumption of raw material for the whole year? Give me the total consumption of raw material, please. Yes, 63,000, 76,500, 84,000 and 96,500. Can I have the total raw material consumption for all the 4 quarters? So the production per quarter we have calculated, and on the basis of that we can calculate how much raw material we require. All right, so production into 2 kgs per unit. Okay, no issues, Sunil. So can I have the total raw material consumption? 3,20,000. Jyoti, it's 32,000, 3,20,000. Shall I take 3,20,000? Is it the correct answer? Please cross-check. 3,20,000 kgs, the raw material consumption. 3,20,000 kgs of raw material we require for the production of 1,60,000 units. You can cross-check that way also. 1,60,000 units to be produced. In 1 unit, 2 kg of raw material is required. So total raw material consumption has to be 3,20,000. 1,60,000 into 2 also, if you do, it will come out to be 3,20,000 kgs because 2 kgs are required per unit. All right. So we have the raw material consumption quarter-wise also and total also. Total raw material consumption 3,20,000. Students, I hope you have understood so far. Okay. Now let us move to the third budget, raw material purchase budget. Raw material consumption is in quantity and we have calculated. So production budget, 1,60,000 units. Raw material consumption budget, 3,20,000 kgs. Be very clear of the units you are adding. It's kgs. Don't write units here. Raw material consumption budget. Raw material purchase budget in quantity and value. So raw material purchase now. 3,20,000 we have the consumption requirement. We require 3,20,000 of raw material. Now, how much raw material to purchase? Students, will take a short break here of 5-7 minutes. I leave this question to you for raw material purchase budget. Calculate the raw material purchase budget in quantity and value. Try on your own. I'm going to explain you also, but try on your own first. And I'll join you after the break. I'll just give you the last note of this question. If you have this information, take a note of this paragraph. It's going to help you to calculate raw material purchase budget. The opening stock of raw material in the beginning, 10,000 kg. The closing stock at the end of the year of raw material, 5,000 kgs. And this consumption information we have taken care of. So this information you can note down, and then I'm scrolling down to this raw material purchase information, 30%, 50%, and 20% of the purchase of raw material as a percentage to total annual requirement and the price per kg. So this information is going to help you to calculate in units and value. All right. We'll take a break of 5-7 minutes. I'll come back to you. Please calculate. Welcome back, students. I hope you must have made the raw material purchase budget. So raw material consumption was 3,20,000 kgs. And then how much we have to purchase. Now, this is the requirement. We must be having some stock also. So opening stock of raw material in the beginning is 10,000 and closing stock at the end is 5,000. That means 3,20,000 we need to purchase. So 3,20,000 we need to purchase plus closing stock we need to maintain is 10,000. That means total raw material requirement is 3,30,000, right? This much is consumption. For consumption we require, and this much closing stock we need to maintain also. So the total raw material requirement to be purchased is 3,30,000. 10,000 is the okay. Closing stock is 5,000. Sorry, closing stock is 5,000. This is 5,000. Closing stock is 5,000. So we require 3,25,000. All right. And we already have some opening stock with us. So 10,000 we already have with us. So that means how much to be purchased? So we need to purchase 3,15,000, right? So this is the quantity to be purchased, units. 3,15,000 units. I'm again explaining you raw material purchase budget. This is the format of the raw material purchase budget. Raw material purchase budget. The format of raw material purchase budget. Raw material consumption plus closing stock of raw material minus opening stock of raw material. And this is the purchases of raw material we need to make. All right. So this is the consumption plus closing stock which we wish to maintain at the end of the year. So the total requirement of raw material is 3,25,000. Out of that, 10,000 we already have. So the balance we need to purchase from the vendors. All right. So 3,15,000 are the units. Now this is the raw material budget in quantity. Now in value. So value we have this. So they are saying if the raw material 3,15,000 units of kgs of raw material. 3,15,000 it's kgs, right? These are not units, kgs. 3,15,000 kgs of raw material is the requirement for the whole year, for the entire year. But the organization wish to purchase this raw material in first 3 quarters only. All right. So 30% of 3,15,000 in the first quarter, 50% of 3,15,000 in the second quarter, and 20% of 3,15,000 in the third quarter. And purchase price per kg is given. You will get the raw material purchase value and hereby the total raw material purchase cost. All right. So can I have the raw material purchase value for the first quarter? Out of 3,15,000, 30% will be purchased in the first quarter. So 94,500 into 2. It should be 1,89,000. Can I have some answers? Okay, most of the students, many of the students have calculated. So good. 1,89,000 should be for quarter 2. 472,500. 472,500. Please cross check the answers. I'm just writing as has been provided. 2,52,000. Is the answer correct? All right. 2,52,000 for quarter. For the second quarter, how much is the value for second quarter? 4,72,500 and 2,52,000. Is the answers correct? Tell me the total raw material purchase value quickly. Total raw material purchase value, quarter 1, quarter 2, and quarter 3. We have to make the raw material purchase budget in quantity and value also. So we are calculating the value. Quantity we already have. Okay. How much is the... Prachi, 2,52,000 I believe is for the third quarter. You have written it as the second quarter. Be very careful with the figures, students. Otherwise, even if you know the answer, you do wrong calculations and you lose marks, right? So can I have the total raw material purchase budget in value? How much total raw material cost we need to incur? 9,13,500. 9,13,500. I've got the answer. Please cross-check the answer. 9,13,500 is the answer. So quantity, I'm writing it over here. 3,15,000 kgs and value is 9,13,500 in rupees. All right. So this is the value and all the three budgets and all the three answers. Production budget in units 1,60,000. Raw material consumption in quantity 320,000 kgs. Raw material purchase 315,000 kgs and the value of raw material purchase cost 9,13,500. I believe this is this. Okay. So let me show you the final look of the solution here. So this was the production budget we made. Clear? Just highlight this, the closing stock for the last quarter. Raw material consumption budget before you. Raw material consumption budget in quantity quarter wise and the total. Raw material purchase budget 3,15,000 kgs. Units to be take noted of. And then purchase budget 9,13,500 is the total. This was the quarter wise purchase. The first 3 quarters we are going to do. All right. So this is the raw material purchase budget we have calculated. Moving on to the next question. I hope you must have understood. All right, just take a note of the last this question, another question. 2 products are there, product A and product B, and 1 grade of labor. Only 1 grade of labor we are taking. So budgeted sales we are given, budgeted sales in units, budgeted material consumption per unit. Material and consumption per kg is given, labor rate is given, overtime is given. If the worker works for more than 40 hours, their indirect workers are given, then target productivity ratio is given. Okay. So here we have to make, I think, the purchase budget and the labor budget also. There are 4 5-day weeks in the budgeted period. Let us see what they are expected us to calculate. Okay. Stock at the beginning also is given. Product A and B. Opening stock, material opening stock. So product opening stock and material opening stock, product closing stock and material closing stock. We have to make the purchase budget and the wages budget for the direct workers, quantity and value for the next month. Clear? The budgeted period is the next month. It's only a month. So wherever required, don't multiply it by default by 12. All right. So you have, it is just for 1 month, the quantity and the value we need for both quantity and value. Material purchase budget. For material purchase budget, what we require first? Which budget should be made before material purchase budget? Can I have the answer? Which budget is required before material purchase budget? Can anybody answer this? We've already done that. Which budget we require for material purchase budget? Any answers? We require the production budget. We should know how much production to be made. Then only we can find out how much material purchase we have to do. All right. So for material production budget, we should have the sales, and we have the sales. So product A and product B. For the next month's budget, you have this information, 2 materials and this. Okay. So product A and product B here. Product A and product B, if I do it over here only, 2,400 and 3,600. We should have the production budget first. No, for material purchase budget, consumption is important, but we need to have the production budget also. So for production and consumption both. Clear? So first we should have the sales figures. We have the sales figures. We have to go stepwise. We have the sales figure. You just have to do a checklist. Sales we have. Next, we should have the production units that we don't have. We have to calculate the production first. Then we have to calculate the consumption first. And then only we can calculate the material purchase budget. A very, very comprehensive question is this. So let us just do it first. First step, we should know, we don't have to make the production budget or the consumption budget as such, but you should know you can do it in the working note as well, right? So let us find out the production units first. Only then we can continue to the purchase budget. So production units, budgeted sales we have, opening stock of goods we have here, opening and closing stock. See, product A and B, opening stock, and product A and B, closing stocks are given. So we need the closing stock first. 4-day sales and product B, 5-day sales. It's the closing stock. Now, how to calculate the day sale? Okay. There are 4 5 days weeks. So 4 weeks are there. Clear? So sale, that means has to be in days. 2400 sales and 3600 sales are for the days. We have to calculate per day sale. There are 4 5-day weeks. So 4 5-day week means 20 days. If the closing stock is denoted in days, so we have to calculate the sale per day. So there are 20 days in 4 weeks, 4 5 days week. All right. So 20 days in total. So this 2400 sale is over a period of time of 20 days. What is the per day sale? 2400 divided by 20. Per day sale is 120. Per day sale is 120 for product A, and 3600 divided by 20, 180 per day sale. Okay. It's a per day sale for product A and B. So how much is the closing stock? 4-day sale and 5-day sale. 4-day sale and 5-day sale. So into 4 and into 5. So calculate the closing stock here. Add closing stock. Per day sale is 120 into 4-day sale is the closing stock for product A, 480. 480 is the closing stock of product A, 4 days sale of 4 days. And per day sale we have calculated. There are 20 total days in the current month which we are doing, or in the budgeted period, and 2400 is the total sales, right? And 180 into 5 for product B, 5-day sale is the closing stock. So it comes out to 900. Now less opening stock. Opening stock, it's already given in the question. 400 and 200 units. 400 and 200 units is the opening stock for product. So that means the finished product. So how much it was? 400 and 200. 400 and 200 opening stock we deduct. Calculate the production to be done. 2400 plus 480 minus 400. 2480 production for product A. 3600 plus 900 minus 200. 4300 has to be the production in units. Production in units. For product A and product B, you should note down 2480 units for product A and 4300 units for product B are the production units, the current production we need to do. We require 2400 sale units, but we also have to maintain 480 closing stock, and we already have 400 opening stock. So 2480 is the production. Okay, some students are saying screen is it's blurred. So can we just correct it if there's any way to do it? Is the screen clear? Is the screen clear, students? I hope now it's clear. Okay. So now we are moving on to the production units we have calculated. Now the consumption. Clear? Only then when the consumption is clear, we can calculate the material purchase also. So consumption in units per unit for material X and material Y. So if we are doing this A and this is B, so 2480 units production. Production will tell us how much raw material consumption we require, 4300. Now the material consumption. Material, we have two material X and Y. So material X takes 5 kgs per unit, 5 kgs per unit for material X. So 2480 into 5. This will give us the raw material consumption. And for material Y, it's 4. So 2480 into 4. Clear? And then for product B, it's 3 and 6. 3 and 6, 4300 into 3 and 4300 into 6. So this will give you the raw material consumption required for product A. So in both the products, two materials are required, material X and material Y. To produce 1 unit of product A, 5 kgs of X and 4 kgs of Y is required. To produce 1 unit of product B, 3 kgs of X and 6 kgs of Y are required. So this way we are going to get the raw material consumption. All right. Can I get the raw material kgs, please? Raw material kgs. Can I have the raw material kgs? Okay, good. It's clear. Can I have the raw material consumption units, please? Raw material consumption. 2480 into 5, it's 12,400 kgs of material X to produce product A. 2480 into 4, 9920 kgs of raw material to produce product A. So in product A, 12,400, 9920 kgs of raw material are used. Total consumption. Can please give me the product-wise consumption first? 4300 into 3, 12,900 for product B, material X, and 25,800 for product B, material Y. Okay, so this is the consumption in units. Can I have the consumption for material X and Y in total? Material X and Y in total. So now I want to have the total of consumption of material X and material Y. Only then we have to purchase it. Material X and material Y, total consumption. Material X, total consumption for A and B. Material Y, total consumption for A and B. So can I have the total material consumption for X and Y? Total. Is it 25,800 or any other answer? Product B, material Y consumption, please check the figures. 4,300 into 6. Okay, it is correct. Can I have the total consumption for material X? 35,720 for material Y. And this is for material X. So these are the kgs for material X and Y, product A and B respectively. All right. Total is 61020 kgs. Total 61020 kgs of consumption is required. See, in this question, they have just asked us to make material purchase budget, but we cannot make material purchase budget unless we know the production budget and the material consumption budget, right? So we have first calculated the production units, then we calculated the material consumption, and only now we can calculate the material purchase. So this much material we require, and then we have to see the stock. So this is the material opening stock and the closing stock. So X and Y, the consumption of material we have just calculated. Consumption, how much consumption we require? 25,300 for X and 35,720 for Y. This is the consumption we require plus closing stock. We have the closing stock. 10 days consumption is the closing stock, 10 days consumption. So this 25,300 is the consumption for 20 days. We have the budget period of 20 days. So convert this information of consumption into days. I'm repeating, closing stock of material is on the basis of consumption per day. So 25,300 and 35,720, the consumption of raw material are for the whole 20 days. So calculate for 10 days. So 25,300 is the consumption for 20 days. You calculate it for 10 days. It's 12650. Just half it. 35,720. 35,720 is the consumption for 20 days. We need the consumption for 6 days for closing stock. So into 6 divided by 20, it will be 10,716. This is the closing stock, 10 days consumption. Convert the consumption into per day and then calculate for 10 days and 6 days respectively. Minus opening stock. Opening stock is already given. 1,000 kgs and 500 kgs. Opening stock is always a deduction. All right. So we will get the raw material purchase budget. Can I have the raw material purchase units, please? Okay, very good. Can I have the raw material purchase? This is the purchase budget we have calculated. All right. Quickly tell me the raw material purchase budget. Let me show you it will save. Okay, so this is the solution also we have here. Number of days in the budget, 20 days. We have calculated this production units. We have calculated the production budget. Then raw material purchase budget. So this is the raw material purchase. See, this is the consumption units which we have calculated. Let's add opening stock. So this consumption was for the 20 days. We have calculated for 10 days and 6 days respectively. So this is the quantity to be purchased multiplied by the raw material per kg, which is given in the question, and you will get the total cost of raw material purchase. This is the total cost of raw material purchase. I hope you have got this question correct. This is the raw material purchase value. Yes, 36,950 and 45,936 is the quantity, the units, the kgs. All right. Always write kgs and then multiplied by rate per kg of material, which is given in the question. I'll just take you back to the question here. So this material X 4 per kg, material Y 6 per kg. You multiply and you will get the raw material purchase cost. Now let us move to the wages budget. So the wages information, let me clear this for you so that we are now concentrate on the labor information. Okay. Right. Labors are paid 25 per hour. So this is the normal wage rate, 25 per hour. Overtime premium is 50%. So 25 per hour plus 50%, right? So 25 plus 50% for the overtime. So 25 plus 50%, it has to be 37.5 if overtime is there. If a worker works for more than 40 hours a week, there are 180 direct workers. So more than 40 hours a week, more than 40 hours a week. So 40 hours per week, we have 4 weeks. We have 4 weeks. So 40 into 4 into 180 workers. So 40 per week, 40 hours per week into 4 weeks into 180 laborers. All right. So 28,800 hours are the normal hours. 40 hours 1 week. So 40 hours into, we have 4 weeks. 4 into 180 laborers, direct workers. So 28,800 hours are for the total workers, basically the total hours of the workers. This must be the normal hours. If a worker works for more than, so if the actual hours come to be more than 28,800 hours, then only overtime is going to be paid. So let's see how the question basically takes the picture. The target productivity ratio efficiency for the productive hours worked by the direct to external manufacturing the product is 80%. Okay, so the efficiency is 80%. In addition, the non-productive downtime is budgeted at 20% of the productive hours worked. Let us first find the labor hours consumption. How much labor hours are required? So we have this information, standard labor hours allowed per unit. We know the units for A and B. These are the units for A and B, right? So I can do it here only. I'm just erasing the material now. We have done with the material. Okay, so number and units for the production units we have, and if we go to the information, where is, okay, yes. So the labor hours required per unit of product 3 and 5 for product A and B, 3 and 5. So labor hours required into 3 and into 5. So this will be the labor hours we require, 2480 into 3, 7440 and 4300 into 5, 21,500. So these are the labor hours required, right? Okay. So these are the labor hours which are required, 7440 hours and 21,500 hours are required. Here they are saying the efficiency ratio for the productive hours worked by the direct workers is actually 80%. Now, what does this mean? This means 7440 and 21,500 hours are basically after an efficiency of 80%. That means this is the 80% hour. Laborers must be paid for the 100% hours they have worked. They have worked for 100% and the efficiency is 80%. That means the total labor hours taken, these are the productive hours. How much has to be the total labor hours worked? That means these are 80% of the hours, right? Efficiency is 80%. So this much hours are required to produce, but laborers were 80% efficient only. They must have taken more time to produce this much of time. I'm repeating. 744 hours is required to be taken to produce 2480 units. If I talk about product A, right? But the laborers were only 80% efficient. They must have taken more time to produce 2480 units. The standard time was 7440, but the laborers were only 80% efficient. That means 7440 is 80% of the hours as per 80% efficiency. Into 100 divided by 80. The total time taken by laborers were 9,300 for product A. They have taken 9,300 hours to produce 2480 units because they were 80% efficiency only. Is it clear? Similarly, for product B, 21,500 into 100 divided by 80. They have taken 26,875 hours to produce 4,300 hours. Hours should be taken is 21,500, but laborers were not 100% efficient. They were only 80% efficient. That means they must have taken more time to complete the products. Is it clear to you? So total time taken by the workers were 9,300 hours and 26,875 hours plus 9,300. All right. So total time they have taken so far is this, plus they have given one more information. In addition, the non-productive downtime is budgeted at 20% of the productive hours worked. 20%, so 9,300 plus 20%. So non-productive downtime also they have to be, let us say the idle time of the machine or the laborers or the rest time of the laborers. So all those non-productive time is also part of the wages they are going to be paid. So the lunch time, all right, the idle time, the machine idle time, or there is some other time lapse, that also they are going to be paid. So 9,300 plus 20%. So total 11,160 hours the laborers were paid. Similarly, plus 20%. 32,250 hours the laborers were paid plus 11,160. So they were paid 43,410 hours. Now, I hope the question seems correct to you. Clear? So now what happens is that 9,300 hours the laborers have taken to produce 2480. Otherwise, they should have taken 7,440 hours, but the laborers were only 80% efficient. Similarly, for product B, plus 20% downtime also was there, which the laborers will get a wage for that also, idle time or the lunch time or whatever. So the total hours for product A, which have been consumed, 11160 hours for product A and 32,250 hours for product B. So total hours to be paid for is 43,410 hours, 43,410 hours to be paid to the laborers. Now, what were the normal time, normal hours work? We have just calculated 28,800 hours were to be paid. This was the normal hours. Beyond normal hours, the laborers have to be paid at the overtime rate. So 28,800 into normal rate is 25 per hour. Clear? So for 28,800, they will be paid at the normal wage rate, and excess of normal will be at the overtime rate. So 43,410 minus 28,800. How much is the excess hours work? 14,610 hours will be paid at the wage rate plus overtime rate into 37.5 per hour. I hope you have understood the labor part. This is very, very important here. So first we have calculated the normal hours and the normal wage rate is given. Over and above the normal hours will be paid at the overtime, which is 50% plus of the normal wage rate. Hours, calculate the labor hours was the highlight of this question. So labor hours, the normal that should have been taken, but what the laborers actually took, because they were only 80% efficient, they took more time to complete. And plus 20% downtime also, every laborer is also paid for that. So total labor hours for product A and B respectively, and total hours for both the products. Clear? So I hope it is given 20. Yes, it is they have to be taken. Productive time is 9. They have taken 9,300 only to productive time is to do the production. So laborers have taken 9,300 hours to do the production. 9,300 hours are for the production only. That's why it's called the productive hours. 20% is for the non-productive. See how much time you are taking to do the production is productive work only. All right. Non-productive is when you are not doing the production. Is it clear? So the 20% inefficiency is not unproductive. You cannot take it as unproductive. It's inefficiency. Right. So there's a difference between the two. So let us see if there is any proper format also, so that you can note the solution. This we have done. Okay, wages budget. Let us just check, have we done it correctly? Yeah. So 9,300 total hours and plus 20% for the downtime also will going to be paid. So this is the total hours which we have to be paid. And the extra hours which are paid will be at the overtime rate, and 28,800 will be paid at the normal wage rate. So 12,67875 is the total wages to be paid. I hope things are clear to you, students. 12,67,875. This is the wages budget. You can take a note of the wages budget. Very good question to revise before your exams. Students, see what happens is in every question, there is only 1 or 2 highlights of the question. Rest of the question, you know how to do it. So just make a this thing that whenever you practice and whenever you solve the questions, just highlight the point or a different aspect in that question, because all the questions you cannot revise before the exams. But these important points or these important factors or any important adjustment you have in that question, only that you can revise. All right. So you have to highlight it or you can note it down somewhere. Like this is the way you have to do. So do it as much as you can revise. What we do, we solve 1,000 questions, but before exams, we are just able to, revise 10 or 15 questions. So you have to revise the best 15 out of those, whatever number of questions you practice on a daily basis, right? So this is how we do. And yes, the main thing first is how to approach the question, and interpretation of the question is very important. All right. Okay, so I hope you have understood, and a couple of students have calculated the labor cost. So let us move forward. If you have any other question, there's another illustration. Just take note of this illustration, please. B Limited manufactures 2 products, X and Y, and sells them through two divisions. Okay, two divisions. That means it must be budgeted sales, actual sales. So I think it's a sales budget question. So sales budget. What's the purpose of sales budget? We have to make the sales budget. Following information has been made available. So sales budget is made division wise. East division, West division, the budgeted and the actual, and product. So product wise and division wise. So there are two products and their division wise sales is given, budgeted and actual, for the last year. Adequate market studies reveal that product X is popular. How we can say product X is popular? See, the budgeted sales 800, the actual 1000, the budgeted 1200, actual 1400. That's why they are saying that product X is popular, because the actual sales are more than the budgeted sales. But it is underpriced. Okay, so it's underpriced. That means prices are come, selling prices is less. It is expected that if price of X is increased by 2, so that means the price is 18, we can increase it to 20. It will find a ready market. On the other hand, Y is overpriced, 42 rupees per unit. But it will, and if the price is reduced by 2, it will have more demand. So see, the sales or actual sales of product Y is less than the budgeted. 600 budgeted, but actual 400. 1000 budgeted, but actual 800. So product X is more popular. So what they're trying to do is they are increasing the price of product A and reducing the selling price of product Y, so that product X seems to be underpriced and product Y seems to be overpriced. So they are just compensating. The company management has agreed for the aforesaid price changes on the basis of the reports of salesmen following estimates. Okay, so they have, okay, on the second part of the question again, percentage increase in sales over budgeted sales. So if we apply the increase in the rate and the decrease in the rate, they are saying the increase in the sales in terms of percentage is given here. With the help of intensive advertising, following additional sales over and above the mentioned estimated sales, over and above the mentioned by divisional measures are possible. So we have to make a sales budget for 21-22 after incorporating the above estimates and show the budgeted sales of this. So budgeted and actual sales of 2021 is already there. So what they are saying is we have to make the sales budget for the next year, and for the current this thing you have to calculate the sales. So this is already clear. 800 units at 18, 600 units into 42, 1200 into this. So this way you can calculate the budgeted sales and the actual sales as per the given information. Clear? So budgeted sales for product X and for product Y, you can calculate the value, I guess, units and selling price is given to you. Let us calculate for 21 and 22. So 21 and 22 we have to calculate. 2021 is already given. So it will be product X and product Y. If we can, okay, let's do it like this. East division and West division. Okay, right. Let us do it like this only. East and West. Okay, do we have this space over here? Okay. So X and Y, East and West. Clear? Now concentrate on X first. So X, they are saying 800 units were already there for East division and plus 12.5%. 12.5%. So how we can do it over here? 800 plus 12.5%. It will be increased if we, because it's a more popular product. All right. For Y, how much is Y? 600. So 600 plus 22.5%. All right. So similarly, you can do it for West division. I'm doing for East division for product X and Y. So if we incorporate basically the strategy which the management has approved, they are saying that sales are going to increase by 12.5% for product X in East division and 22.5% for Y East division, and then plus 120 units and 80 units. So plus 120 and plus 80. So let us find out the new sales volume, the units for product X. 800 were original and we are expecting an increase of 12.5% plus 120 units due to advertising. Also we're going to get extra units. All right, over and above the mentioned estimated sales So 1020 sales are for the East. 1020 units for product X. Now let us calculate for product Y. 600, 22.5% is expected as an increase, 22.5% plus 80 due to advertising. So 815 units are expected for Y units in East division. Multiply by new selling price, 2 rupees increase for X and 2 rupees decrease for Y. So this is the new selling price. You will get the sales. All right. So this is the budgeted sales for 21 and 22 on the basis of new estimated sales and the selling price. Similarly, for West division, 1000 units. I'm doing it over here for West division. East I have done 1000. Okay. West division for Y, 1200 units. So it is 1200 units, right? 1200 units plus 7.5%. 1200 units plus 7.5% plus 140. So 1430 should come. 1430 should come for X West division. And how we can do for Y? 1000 units expected to increase plus 12.5% and plus 100 units. So West division product Y 1225 units. 1225 units. All right. It's just you have to calculate the units here. Selling price has to be upgraded to 20 and 40 respectively. So yes, 1020, of course. So you have to calculate like this only. 800 units, I'm telling you again, for product X, 800 units plus 12.5%. 800 plus 12.5% plus 120 units due to advertising, 120 units. Similarly, I can write it over here, 600 plus 22.5% plus 80 units. All right. So this is how it's 1020 and 815. Similarly, you can do it for West division. The units are 1200 and 1000 plus 1200 plus 140 plus 1000 plus 100 due to advertising also. All right. So it should come 1430 1225. 1430 1225. That is the more than half of the question is done if you are able to calculate the new sales volume, and per unit you already know 2 rupees has increased for X and 2 rupees has reduced for Y. So this is how we do it. I hope you have understood, students. All right. So let me see if we have we have the solution also. Yes. So there we go. We have the quantity and the units. If you can see, new units which we have calculated for X and Y for East and West division and the new rate. And that is how we have made the sales budget for 21-22 is comparatively easier than the other budgets. So you just need the quantity, the revised sales units and the selling price you already have. Similarly, sales budget 2021 was already there. You just have to multiply. The whole information was already there at the old selling prices. So sales budget for 2021 at the old selling prices and sales budget for 21-22 new volume and new prices. All right. So this is the amount 49,000 sales budget for product X, 13600 sales budget for product Y. So this is how we do the sales budget. I hope you've understood this. Any doubts so far in this question? Okay. Shall we move on now? So this is the actual sales, the budgeted and the actual sales, which was already given in the question. Okay, students, there is another illustration. It's a practice illustration. You can just do it. I can explain you how you do it. So we have the total figures for the entire organization and product wise also. Clear? So this is the output, selling price, material. So direct labor, direct material is given to you. And this is the total overheads and the total cost, direct material, direct wages. See, the whole cost sheet information is given to you, and product-wise information is also given to you. Clear? So what they are asking, variable overheads are absorbed, variable costs they have given, and so they have you have to make a budget giving in way two sort of things. First of all, the current position. Current position is there are two products. All right. So you can make a cost sheet for two products the way we used to make. Sales are given, then of course less all the costs. Fixed factory, variable factory are given to you. The information is given to you, and the budget is that they are planning to add another product C, and the information for product C, similar information of product C is also given to you. So just take a note of this question. It's a practice question and you will be able to do it. So you have to show the comparison of both the positions. Okay, you can take a note of the solution also. See, position for 2021, 2 products are there, and position for 21-22, 3 products are there. And the product-wise information is also given. So the units, earlier there were only 2 products, and now there are 3 products. See, the sales are the same. Sales are total 3 lakh earlier also, and total 3 lakh now also. So they want to see what is the favorable position. So if I take you to the last profit thing, for the 21-22, there's an increase in profit of 10,000. So I think product C inclusion is recommended. This is what they asked out of you. Rest, I think you can calculate. Sale minus marginal cost, contribution, fixed cost, total fixed cost, and then the profit. So you can take a note of this solution and you can practice it. Yes, Aslam, this is probably I think last class for the costing as well. I hope you must have covered all the units by now, and you must be preparing costing. A lot of practice is required in cost and management accounting. So I hope you have taken note of the question. It's a practice. It's a good practice question. So I've shown you the solution also, so you can practice over there. All right. Okay. So we have zero-based budgeting now. See, zero-based budgeting is basically the traditional form of budgeting is we do the budgeting on the basis of past performance, also on the basis of historical data also. Zero-based budgeting is we make the budget for every activity. For example, I want to do research and development. So for research and development, the whole cost benefit analysis will be done. That if the expected cost of research and development comes out to be 5 lakh, what will be the benefit out of it? Unless the benefit is charted out, the budget for research and development will not be approved. That is zero-based budgeting. Why it is called a zero-based? Zero-based means we do not take any past experiences or historical data into consideration. I'm repeating, zero-based is we start afresh for every budget, for every activity. Zero-based budgeting is an activity-based budgeting. For every activity, we approve the budget. It is not for the department. It's not a departmental budget. Like in traditional budget, we make the production budget, we make purchase department budget, we have made the sales department budget, we have made the raw material inventory budget. But in zero-based budgeting, the budgeting is not department-wise. The budgeting is activity-based. So if there are 10 activities which we are going to do, which is the most important activity, so it's also called priority-based budgeting also. So if I have to do research and development budgeting, I have to see what is the benefit of the research and development, the budget, the activity which we are going to do. Unless the benefits are charted out, we will not get approval of the budget. And second most important point is we don't take into consideration any past analysis, past performances, past records, or any historical data. It's just for every activity we start again. From point 0 we start, as if it's happening for the first time, even if it has happened multiple times earlier, but we see and we consider that it is happening for the first time. We make a fresh budget. We don't take any past analysis or data for it. That's why it's called a zero-based budgeting, and it's not made department wise or category wise. It's made activity wise, right? For every activity we have to implement any activity, for that we will make a special zero-based budgeting for it. So it's not for the whole department, it's not for the entire organization, it's for every activity. We have to, let us say we have to organize a conference. So for that conference, we have to see the cost benefit analysis. So for every activity, for everything, we have to make a zero-based budgeting separately. All right. That is the whole significance of zero-based budgeting. So this is an activity-based budgeting where budgets are prepared for each activities rather than functional department, right? This is the most important characteristic of a zero-based budgeting. So there are stages actually. We identify the decision package. Decision packages means for what activities we have to make the budget. All right, we can make a budget for research and development. We have the advertising thing also lined up. So we will make a separate budget for advertisement. So again, cost benefit analysis for advertisement separately. We will make a budget for R&D separately. So for every activity we need to do, we have to make a fresh budget. Clear? Evaluation of decision packages. Let us say, so we have lot of activities for which we have to make the budget. Activity 1, 2, 3, 4. So we will prioritize the activity that, okay, fourth activity is the most important. Then let us say second, then let us say 1, then let us say 3. So we will prioritize the activity and then we allocate the resources. So we will allocate the resources first of all for the fourth activity. So identify the activities for which budgeting is required. See, there is no department, there is no production purchase or raw material or something like this. This is for all activities we need to do. R&D we need to do. We need to make a budget for advertisement, or we need to make a budget for any campaign we are going to do, or let us say we need to open an NGO for that also. So different activities which we want to do, and then we will prioritize which activity is most important for the organization. Let us see, for the time being, R&D is most important. So R&D will be the first preference. Resources will be allocated to R&D first. So this is how zero-based budgeting is there, and we don't take any past performance analysis to make zero-based. We start from zero, from the very beginning. That's why it's called a zero-based budgeting. All right. So I hope you have understood the concept behind it. Yes, zero is it's from an initial level. We don't take any past records or analysis. We just look it forward, and from the we make a decision from the present scenario, the current scenario. All right. So that is we based you. Aslam, I also miss teaching the students for the current batch, but now I think teaching is over and you have to now practice and prepare for your exams, right? Okay, so stages in zero-based budgeting, which I explained you, we identify the decision package. Decision packages means the activities for which decisions we have to take. So first we have to identify, then we have to evaluate that what decisions which will require what type of funds and what type of approvals, everything we evaluate. Then we rank the activities which are more important for the organization at present, and then we allocate the resources for the priority wise activities. That is zero-based budgeting. Clear? Okay, then we move on to budget ratio. So this is initially when we started the budget and budgetary control, basically we started with budgetary control also. That means we have made the budget, we have made the production budget, we have made the master budget, the raw material purchase budget, the sales budget, the flexible budget. So we have made the budget, and then the actual thing happens. We compare the actual with the budgeted or the standard. So the difference between the actual and the budgeted are the variances, are the basically the difference. We analyze the deviation why it's going to happen. That is budget ratios all about. So budget ratios provide information about the performance level, the extent of deviation of actual performance from the budget. So we have made the budget, then actual sales will happen, actual production will happen. How much is the accuracy of the budget, that we check. So greater the deviation, that means we have to check upon it that the deviation should be minimum. We should be as close to the budget as we have made. All right. So if the ratio is 100% or more, the performance is considered to be favorable. Favorable means if we talk about cost, actual cost should be less than the budgeted cost. That's why it will be favorable, right? So if the ratio comes out to 100%, more than 100%, so it will be a favorable ratio. And if it comes to be less than 100%, it will be unfavorable. So you should note down this also. Standard costing. See, standard costing is after the budget. So first we have the forecast, then I explained yesterday also. We start with the forecast, then we make the budget, and then comes the standard costing. What is the difference between budget and standard? Standards are kept with respect to actual output. What is the actual output? So standard measure, like standard measure for the actual output to produce 500 units of actual output, standard proportion is this. That is standard. Budgeted is total estimate. Standard is always vis-a-vis the final or the actual output. So first forecasts are made, then budgeting is done, and then standard costing, what you're talking about. All right. So they are the various ratios. You can find it here. Efficiency ratio, standard hours by actual hours. Take a note of these budget ratios. Sometimes the question comes on these budget ratios also. Master budget. Master budget we have already done. Master budget we have done a question also, Vedant, of master budget. Master budget is the, you can say the perform of the complete income statement in a costing format. It's the cost sheet. All right. So first part till profit, you can say the cost sheet, and then later cost sheet, you can add the interest and tax also. That is the master budget. I've already explained it. So budget ratios, efficiency ratio, standard hours by actual hours into 100, efficiency. So how much we are efficient, how much actual time we are taking in vis-a-vis in proportion to the standard time, right? Activity ratio, standard hours divided by the budgeted hours. So that is the activity ratio for you. Calendar ratio, available working days divided by budgeted working days. So that will give you the calendar ratio. So how much budgeted days were there and how much available working days were there. So we projected 50 working days should be there. How much were the actual working days when it came to the budget period? Standard capacity usage ratio. So these are the different parameters where we compare the standard with the actual. All right. Budgeted hours divided by maximum possible hours in the budgeted period. So if we are taking the next week, all right. So we are making the budget for the next week. The whole budget, if we can take 8 hours a day and 6 hours a week. So maximum possible hours in a week could be 8 hours per day into 6 days a week. So 8 6 are 48. But now how many budgeted hours we have taken? Let us say we have taken only 40 hours a week. So that will be the budgeted hours. So budgeted hours divided by maximum possible hours in the budgeted period. Similarly, actual capacity usage, how much actual hours are worked in proportion to the maximum possible working hours. So if the maximum possible working hours in a week is 48, 8 hours in a day and 6 hours week, we can stress. Sunday we have to take off. So 48 hours are the maximum possible. Budget we have taken as 40 hours. We have not taken 48. So budget we have taken 40 hours. Actual hours could be 42. Actual hours could be 36 also. So how much actual hours we have worked vis-a-vis the maximum possible hours during a week, right? Actual usage of budgeted capacity ratio, the actual working hours divided by the budgeting hours. So there are different parameters on the basis of which we can calculate the deviations between the budgeted and the standard. All right. Let's see if we have a practice question. All right. We have a practice question also here. So just take a note of this practice question, please. And calculate all the ratios. Please calculate all the ratios. I'll take you to the slide of the ratios where ratios are given. You just take a note of this. Let me also take a note of this. Actual hours expected to be worked per 4 week. Actual hours expected to be worked. 6,400. What is 6,400? I just explain you this. So 6,400 actual hours expected to be worked. So this has to be the budgeted hours. All right. Expected hours to be expected, like which I said 40 hours. 40 hours, I took an example. 40 hours we expect to work in a week. Standard hours expected to be earned per 4 weeks. So this could be the maximum possible hours. These are maximum possible hours. Standard hours expected to be earned per 4 weeks. Standard hours expected means the maximum possible hour 8,000. Actual hours work. So this is actual hours. All right. Standard hours earned in the 4-week period. Standard hours earned in the 4-week period. This is the standard hours. All right. So budgeted hours, maximum possible hours, actual hours, and standard hours. Standard hours and budgeted hours. What's the difference? Standard hours are always for the actual output. All right. Whatever actual output production is happening, what should be the standard hours used for that actual production? So standard hours are always in proportion to the actual output. So these 4 things are there. Now can we calculate it? Related period is 4 weeks. There was one special day holiday. See, related period is of 4 weeks, 8 hours, 5 days a week. So 8 5s are 40. 40 hours. 40 hours and 4 weeks, 8 hours of 5 days per week, and one special holiday. Clear? Due to national event. So 5 days per week. So 20 days total. 20 days and one special day. So 20 days and one special day. So actual days worked was 19 days. Clear? With this information, we can go to the question, calculate efficiency ratio. So you have noted down. Let me also note down so that we do it. Budgeted are 6,400. Maximum are 8,000. Actual are 6,000. And standard are 7,000. All right. Budgeted days are 20 days and actual days are 19 days. So all this information will be required. Take a note of all this information, please. So all the 4 information you can note down, plus budgeted days 20 and actual days 19. This could be the maximum possible days also. So now let's go back. All the ratios we can calculate. Efficiency ratio, standard hours by actual hours. We know the standard hours 7,000. 7,000 divided by actual hours into 100. You will get the efficiency ratio. Actual hours 6,000. I hope you have noted down all the information. So standard hours 7,000, actual hours 6,000 into 100. You will get the efficiency ratio. You will get more than 100%. It should be 7,000. You have taken 6,000. So it should be a favorable ratio because it will come to be more than 100%. All right. It will be more than 100 because 7,000 the numerator is greater than the denominator. So answer will be more than 100%. Activity ratio, standard hours by budgeted hours. So standard hours 7,000, budgeted hours 6,400. Standard hours divided by budgeted hours. So standard hours and the budgeted hours. Yes, please calculate. Be ready with the ratios, all of you. Yes, 7,000 divided by 6,400. Then the calendar ratio. Available working days. How much are the available working days? 19 days. And the budgeted were 20 into 100. Available working days into budgeted working days. So we have worked for less than the budgeting days, which should be unfavorable. The answer will be less than 100%. Anything which is more than 100%, it should be favorable. Standard capacity, please calculate all the ratios, all the answers should be ready. Standard capacity, budgeted hours divided by maximum possible hours. Budgeted hours divided by maximum possible hours, 6,400 divided by 8,000 into 100. Actual hours, actual capacity, 6,000 divided by 8,000. 6,000 divided by 8,000 into 100. Hope you are doing it also as well. Calculate the ratios. Be ready with the ratios. Actual working hours, again, 6,000 divided by budgeted hours, 6,400 into 100. So we can, I've placed all the figures. You can just calculate the ratios. Can I have the efficiency ratio, please? Yes. Okay, so we are getting the figures here. I've told you we have all done the placement of the hours. You can just do it. Standard hours, actual hours, budgeted hours, maximum possible hours, budgeted working days, and available working days. So we should have the answer. Let me also tell you the answer. So efficiency ratio is 116.67%. Activity ratio, as I calculated, 109.37%. Calendar ratio should be less than 100%. It's 95%. Standard capacity ratio, again, it should be less than 100%, 80%. Actual capacity should also be less than 100%. It's 75%. And budgeted capacity ratio should also be less than 100%. It's 93.75%. So I've also calculated it for you. So this is the ratio. Sometimes the question comes for these ratios also, which you can just solve it. It's very scoring question. Performance budgeting is actually we analyze the performance of the organization. So that comes under performance budgeting. 1 minute, it's going to hang. Just solve all the ratios, please. All right. So yes, who's asking this? Vedant. Vedant, performance budgeting is we analyze the performance of the organization as a whole. All right. So we have charted out the objectives of the organization. Let us say for the department, for the purchase department, for the production department, we have kept the responsibilities. We have kept the criteria. For the purchase department, this should be the purchase cost. For the production department, this much units should be produced. So, and then vis-a-vis the objectives of the organization, which should be the long-term objectives also and the current objectives also. So if the particular department is not meeting the criteria and is not meeting the objectives or is not meeting the performance standards we have kept, then they has to be, they are responsible, they are accountable, they are answerable that why they could not achieve the targets which were kept for them. That is performance budgeting. All right. So performance budgeting is kept for different departments. The performance targets are kept for every departmental, whether it's individual or a group. So their performance targets are kept, and then when the actual performance happens, then we basically compare what were their targets and what they have achieved. So if there are major deviations, they are answerable that why the deviations happen. That is performance budgeting. So I hope you must have understood the concept behind it. And yes, the budget ratios, I'm sure the students, you must have calculated. So that's all for the budget session. And that's all for cost and management accounting from my side. I hope I'm able to make you understand the concepts. We have practiced a lot of questions. Now you have to start. You have to revise a lot of course, the whole units, the lot of modules are there. Every module is important. Every unit is important, when even if it's a theoretical or a numerical. All right. So it's not very theoretical. You have to miss. There are many underlying concepts in the theory which are applicable to when you solve the numericals. So please don't ignore the theory portion also, because it involves all the concepts. All right. It are the hidden concepts which are applicable when you solve the numericals. So you have to do 100% coverage of the syllabus. And all the best from my side. Hope all of you pass through fine colors with good marks. And yes, the fundamentals should be very clear. So that's all from my side. Thank you so much, students. Yes. to, and please do not leave anything from the study material. Your study material should be the base. You don't require anything, because you should practice as much as you can revise. All right. So start practicing the questions again and again. I mean, you practice the same questions again rather than, practicing new questions every time. I am telling you, this does make a difference, because you study from 4 or 5 books, you are doing 1,000 questions, you will yourself get confused. You will be able to do the questions, but before the exams, you won't be able to revise and memorize the concepts. So practice the same questions again and again rather than doing every day you are doing a new question. All right. And please do not miss anything from the study material. It's very, very important. Study material is very good of the institute, and all the concepts are very clear in that. And so good, happy learning, happy studying. And from my side, all the best to all of you. And you were all very cooperative. You were, very good students. You were solving everything along with it. You're giving me so many answers. So I'm really happy, and I wish you, all of you, all the very best for cost and management accounting. All right. Thank you, students. Have a good day. All the best.